It's July 1st, and U.S. liquids pipelines are raising rates. This article was written by Verify Research. Summary: many liquids pipelines in the U.S. were able to increase their rates by 2% on July 1st in accordance with the Federal Energy Regulatory Commission's FERC Oil Pipeline Index. FERC's Oil Pipeline Index is based on the change in Producer Price Index for finished goods with an adjustment. The adjustment factor changes every 5 years. A new adjustment factor for the 5-year period from July 2026 through June 2031 could be announced later this year. With all due respect to Canada Day, July 1st carries other significance for U.S. liquids pipeline operators. Namely, this is the day that pipelines following the Federal Energy Regulatory Commission's FERC Oil Pipeline Index are able to adjust the rates charged to customers. Today, these pipelines can increase their rates by up to 2.0%. This note explains the Oil Pipeline Index, looks at historical rate adjustments, and discusses the upcoming 5-year review of the index. Understanding FERC's Oil Pipeline Index. Interstate liquids pipelines, by definition, transport oil, natural gas liquids, and refined products, gasoline, diesel, etc., across state lines. These pipelines typically adjust their rates each year based on the FERC's Oil Pipeline Index. It is estimated that around 3/4 of oil pipelines use the FERC index. The FERC index sets the ceiling for annual rate increases that go into effect each July 1st. The index is based on the change in the Producer Price Index for finished goods, PPI-FG, with an adjustment. Because the index is based on an inflation metric, it is often cited when discussing midstream's inflation-protected cash flows. Read more. To be clear, indexed rates are mostly used for liquids pipelines, but other midstream assets can have contracts with inflation escalators currently. The index is set at PPI-FG plus 0.78%. Given that PPI-FG increased by 1.22% for 2024, liquids pipelines are able to increase their rates by up to 2.0% on July 1st, or technically 1.9976%. The chart below shows the annual changes in the index since 1995. For the period shown, the average adjustment is 3.1%, and the median is 2.7%, on occasion. In periods of deflation, the index has dictated a decrease in rates. High inflation in 2022 resulted in a ceiling increase of 14.3% for July 1st, 2023. The adjustment factor for 2021 to 2026 has fluctuated. While indexed rates should be straightforward, the adjustment factor in the FERC index has been a point of contention. FERC sets the adjustment factor every 5 years. In December 2020, the index was established at PPI-FG plus 0.78% for July 1, 2021 to June 30, 2026. However, in an unusual move, FERC changed the index to PPI-FG minus 0.21% in January 2022 as part of a rehearing. In September 2024, FERC reinstated the initial order, setting the index at PPI-FG plus 0.78% after a court ruled that FERC's rehearing violated the Administrative Procedure Act. The chart above reflects the higher reinstated values. It remains unclear how pipelines will make up for undercharging between March 2022, when the lower adjustment factor went into effect, and September 2024, when the initial order was reinstated. FERC has sought comment on how to best remedy the lower earnings during that period. Next 5-year review on deck. If historical patterns hold, FERC would be accepting comments for the next 5-year review of the pipeline index over the coming months. A new adjustment factor for July 2026 through June 2031 could potentially be announced later this year. As a reminder, FERC is tasked with ensuring that pipeline rates are just and reasonable. Ideally, the adjustment factor will remain constant through the next 5-year period. The benefits of indexed rates are their simplicity, transparency, and straightforward implementation. Unfortunately, some of those benefits were lost in the 2021 to 2026 period as the adjustment factor was set, changed, and reset. Disclosure: Verify LLC 2024. All rights reserved. This material has been prepared and/or issued by Verify LLC. Verify, and/or one of its consultants or affiliates. It is provided as general information only and should not be taken as investment advice. Employees of Verify are prohibited from owning individual MLPs. For more information on Verify, visit Verify Original Post Editor's Note. The summary bullets for this article were chosen by Seeking Alpha editors. This article was written by Verify Research,